operate with AMP on, that power still has to come from somewhere. So, for example, if it's one of the new projects, the debt service payments are still required to be met regardless of the output of those projects, and then you have to go out and replace that power with market power in that case. So we need to have adequate funds on hand, again, to look for those kinds of contingencies. If we had any debt service right now, we don't have any direct debt service on the utilities books, but you want to make sure you have enough money to pay your annual debt service payments, of course, and to meet your current capital improvement requirements for the current year. And then another one that maybe didn't get discussed too much, at least that I saw with the Utility Financial Solutions report that you saw, was what about insurance deductibles, or if we have, let's say, a major ice storm, a tornado, windstorm that causes significant damage to the electric distribution system, do you have adequate funds on hand to be able to issue purchase orders to get the repair work started? We can't issue a purchase order unless we have money in the bank to back that purchase order up. So some of the background, last year the board engaged Utility Financial Solutions to do an electric cost, service, and rate study and develop a minimum cash reserve policy. The BPA adopted that electric rate plan last month, and UFS had presented for your consideration back in February a minimum cash reserve policy. And those recommendations at that time were that you have 45 days worth of annual O&M expenses, excluding depreciation expense and power supply costs, as part of that reserve. Again, to account for the time delay from when expenses are incurred and when utility bill payments are received to cover those expenses. 45 days of annual power supply expenses for the same reasons. We get a bill from AMP, which then ends up impacting the costs. We've already paid for it before the customers get billed for it. So we have to have adequate cash on hand to make sure we can pay for those power supply expenses. They also wanted to account for depreciation expense by using 3% of the historic asset value. We mentioned the 100% of current year debt service requirements. Again, we don't have any right now, but it should be part of the calculation. It can just end up as a zero if there are none, as there are currently. And then they also looked at 20% of the 5-year capital improvements budget. Now, what they had projected was $2 million per year, so it ends up being the same as the 1 year. But if we factored inflation in there, then there would be some difference. And you may recall this table. It was in that report that you received from Utility Financial Solutions, and this just represents in tabular form here what we just discussed, the 12.3% or 45 days of O&M expense, power supply expense, the 3% of historic rate base to account for depreciation, and then the 20% of the 5-year capital improvements. And so then they went ahead and plugged into that calculation our actual projected financials for 2017. So you can see how those all shake out. If you take out power supply expense and depreciation, 45 days of operating and maintenance expenses is a little over $500,000. 45 days of our annual power supply expense is a little over $2 million. Depreciation was $925,000, just a little bit less than $1 million, and then $2 million for the annual capital improvements. So that came up with a number of just slightly less than $5.5 million. That represents about 96 days of our cash requirements overall. So the projected reserves at that time were about $12.5 million. That represented about 220 days of cash on hand. Does that make sense? Okay. So we wanted to take a look and see if there were other electric utility industry benchmarks that might be applicable here for your consideration as well. American Municipal Power annually conducts a credit scoring for each one of its members. AMP's cash reserve benchmark for O&M expense, excluding power supply costs, is 6 months. I spoke with Chris Dieter that manages that program for them down there, and they work with a number of different ratings agencies, Fitch, Moody's, Standards & Poor, and their recommendations generally from those rating agencies is that you have not less than 6 months worth of cash on hand available to secure higher bond ratings. Again, we don't have any direct debt right now, but the bond rating or the strength of this organization does impact what AMP does with financings for the projects that we participate in. So if the members collectively are stronger in their credit rating, it helps AMP secure cheaper interest rates, which translates into cheaper power supply costs for our customers. So that's why it's still applicable whether we have debt or not. If you went to issue any electric utility debt in the future, they would be looking at this directly when they're considering interest rates for bonds that we would borrow against. So if we take the projected O&M minus power supply costs for 2017, it's a little over $5 million. So 180 days of that, using that yardstick, would be about $2.5 million. Now, that would not include some of the other items that we talked about in there. For example, what do we do to make sure that we have adequate funds on hand if we had a major weather event here that impacted the system? But it is something to consider when you're taking a look at what you think would be an appropriate measure for us to apply here. Moody's Investor Services actually publishes a rating methodology for municipal electric systems like ours that have generator ownership, and that was revised recently last year. And one of the measures that they use when they're taking a look at what credit score or credit rating they're going to give a municipal electric system is the adjusted days liquidity on hand ratio calculation, they call it. And that's the calculation there. They take a look at what our available unrestricted cash and investments are, multiply that by 365 days, and then divide that by the O&M expenses minus depreciation and the debt portion of payments made to joint action agencies like AMP under take-or-pay contracts. Well, most of our arrangements with AMP are under take-or-pay contracts, and we do have the debt service payment amounts. So we plug those numbers in for you here, and currently, or when we put this to keep it all consistent, I use the same numbers that UFS used here. So roughly that $12.5 million fund balance times 365 days, and then divided that by the total O&M expenses, including power supply, and subtracted out the depreciation expense and the debt service portion of the power supply cost. It equals 273 days. And below that are the ratings that Moody's assigns based on the number of days of cash. That's not the only measure that they use, but it's one of the pieces in their calculation. So you can see currently, at least with that measure, we would qualify for a AAA bond rating, which is the highest level of credit rating, which means the lowest borrowing cost. If you wanted to look at the 180 days, which would still be a AA, you can see that measure is from 150 to 250 days. Then that number equals about $8.2 million. Other cash reserve considerations. I mentioned this before, and I'm not sure the board was aware that currently our overhead transmission and distribution system lines are not insured. And that is not an uncommon thing. It's a kind of specialty insurance that you have to seek out and purchase. They cover, for example, our power plant, the Auglays, substations. All of those types of things are generally under the city's insurance. but the overhead transmission distribution system lines themselves are typically not insured. So we've met with Andrews O'Neill and Lowe to investigate coverage options. We have another meeting scheduled with them Thursday, right? Yeah, to discuss that, so we'll know a little bit more as far as perhaps what coverage might be available and what the annual premium might be for such coverage, and we'll be able to share that with you in the future. So the concern, of course, is that, as I mentioned before, if a tornado, severe wind, or ice storm interrupts service, we have to have money on hand to be able to write purchase orders to buy materials or to get folks in here to help us restore service. So to address the contingency, if we don't have any other coverage, you know, what I've seen other utilities do is taking a look at maintaining another year's worth of capital improvement expenses in there to be able to get these purchase orders going. That would buy you time enough that we could seek other means of financing if the costs exceeded what we had available in the fund balance. And of course, if we can get coverage, adequate coverage, then we wouldn't have to worry about that piece of it. You would just want to make sure that you have the deductible amount. Again, we may not be able to get full coverage on the replacement value of our system. We may be able to get some partial amount. And then depending upon how big of a deductible we're willing to take will also, I'm sure, impact the premium. But we'll know more after we have this meeting with our insurer this week. So if you put all of that together, it really looks pretty much the same as what UFS presented to you back in February with that additional potential contingency here. Okay, so that accounts for the difference between what you saw with roughly $5.5 million there and the $7.5 million here. I also included that Moody's calculation in there too, just for reference from the prior slide. So you can see those numbers are about $700,000 difference, but they're in the same sort of range. And that would equal, if you use this $7.5 million number, that equals 165 days cash on hand, still is in that AA bond rating area, which was 150 to 250 days. But certainly one of the things that the board could consider is a couple of different standards there. One, using a calculation similar to this, as well as if you would like to have a certain number of days of cash on hand, then you could do that too. Or the greater or the lesser of the two. There's a number of options that you could consider there, and all of those would be fine. But I think when people ask, and it's a very legitimate question, how much money should you have as a minimum in your electric fund balance, this certainly helps quantify that a little bit for you, I think. So depending upon which direction the board would like to go, we can finalize that minimum cash reserve policy and present it for your consideration at the next meeting. How we would go about this is every year when we're doing the budget process, we would do this calculation, because every year your costs are going to change, and if you have debt or don't have debt. So you would perform this as an annual calculation as part of the budget process, so you would know if you adopted that budget whether or not it should meet this minimum cash balance target. And then we could take a look at establishing similar policies for the water and communications utilities as well. Questions?
No, Kevin, I'd just like to make a comment. I know you and I know how important it is to keep our bond rating via Moody's and through AM. In case we ever build a big project here,
Yeah.
we could borrow that money at a real low interest rate. The higher your bond rating, the lesser your interest rates are.
Right.
So that's really
Right.
important.
Right, and I think, you know, if someone would say, well, if we're not borrowing money, then this isn't important. it's still important. These are the business practices that these rating agencies say are the acceptable practices. Okay, so it's not something that we're conjuring up here. These are the folks that do this rating for utilities like ours all across the United States. So this is the industry standard coming up with something along this line. And it really comes down to what you feel comfortable with as a board.
Couple questions.
Mhm.
In the bond rating, does what the city side borrow has an impact on that also? Or is it this just looking at the utility?
That's a great question. If you're issuing revenue bonds for the electric utility, then it would be primarily based on what the utility's credit rating is. Now, if the city had surplus general obligation capacity available, you could borrow legitimately, the electric utility could borrow GO or general obligation debt. That would reduce the amount of borrowing capability that the entire city has to be able to do that. So traditionally, we've went the revenue bond route. It ends up costing more than the GO because the general obligation debt pledges the taxable income or value of the entire city versus revenue bonds pledge the revenue from the electric system.
Ratepayers.
Correct. And if you defaulted on the bonds, then the collateral is that they could take your system and use that.
How does the power supply cost adjustment impact bond ratings?
It's really more of a function of what the rates are. So as you went through the recent change, remember we took that out with the rates that you adopted. It ended up getting included the power supply costs that we have projected for the next several years, which if you remember were pretty flat.
Right.
We ended up rolling it into the rate rather than having it as a separate issue. If we would have updated rates more frequently, we would have taken those changing power supply costs into account when we would have modified the rates, and it wouldn't have grown to the level that it was because if you remember, we had not updated those rates since 2006, so more than 10 years ago.
So if I was a ratepayer, I would look, this is a minimum, what's the maximum?
Right.
So, is there a maximum?
No, not necessarily. There certainly isn't. It is the minimum, and then, you know, it does definitely provide the board with much more options as far as how to handle projects going forward, or some of those contingencies that we talked about. If we saw some higher power supply costs, you wouldn't have to pass all of that through the PSCA if you so chose.
And you talked about if we had a weather event and potentially
Mhm.
took out the system, that we could get purchase orders started, but then the bond revenue process, we could maybe float some bonds if we needed more money or borrow
That's
more money.
correct, or certainly you could even work with local banks if you wanted to. There's a number of different options there. AMP has a bond anticipation note program that they offer on behalf of their members. They're one-year bond anticipation notes. Typically, the interest rates have been pretty low in the 2% range or less in recent years with that kind of a program, where revenue bonds, if you were looking out at a 20 or 30-year revenue bond, is probably 3 or 4% right now, I would guess. So, but I think when you take a look at some of the projects that you may be looking at, for example, I think you've discussed the replacement of the Daggett substation, for example. That kind of a project is probably $3.5 to $3.8 million cost. Well, you've only got $2 million in your capital budget that was developed with these rates. So the question is, do you spread that over multiple years? Do you issue a bond anticipation note? It's a small enough amount of money you wouldn't want to go the revenue bond route, because then you have to do an official statement, you've got to get bond counsel involved, you've got to get rating agencies involved, and it probably cost you $400,000 or $500,000 just to put all of that stuff together with revenue bonds. So if you wanted to borrow the money, probably the bond anticipation note program would be the better way to go. But you do also have some fund balance there that would be available that could be applied as well.
Any other question?
No, but I think it would make, at least it would make me feel more comfortable in the case of the power plant turbine. That.
Right. That's an excellent
That was, what,
point right there.
$275,000 or something like that that we were hit with. And big decision whether to rebuild or get a new one. And
Yeah.
this would help make that decision easier.
We have those kinds of contingencies that occur.
That's just
in
a
this
comment,
business.
not a
Yeah.
question, though, but.
Yep, but it's an excellent point.
But it is a good feeling to know that you have enough cash on hand that you can just keep on going. Just keep things,
Right.
get them
Well,
fixed, and let's get back in business.
Yeah, and I know that our customers would expect that we're gonna do that
Right.
and get service restored as quickly as possible. And so it wouldn't be a good answer to say, oh, we gotta wait until the bank loan goes through before we start
Right.
rebuilding things. So I guess, is the board's feeling that you support putting a policy together that reflects that with the either or? If we have adequate coverage, then we would look at just putting the deductible amount in there, absent being able to secure coverage at a reasonable cost. We could put that 1 year capital improvement expense.
Yeah.
Or do you not like that idea? I think we've got to cover that contingency one way or another. And it can be either or. It doesn't have to be one or the other.
Do we have a value of what we're protecting relative to the insurance side of that transmission line, what that number is?
I think we will have a better idea after we meet with them on Thursday. I think we'll be able to share that. My experience in the past, anyway, with overhead lines coverage is, let's say that the system replacement cost was $100 million, just for example. I had not been successful in the past at getting 100% coverage for those types of things. They may cover 30%. Well, then you have to evaluate what's the likelihood of more than 30% of our system being wiped out at one time. And if it's a tornado, maybe, or an ice storm, those things are all possible. But more likely, if you had 30% of your system value covered, replacement cost covered, then that would buy you adequate time to try to deal with the rest of it. And in many cases, it would probably cover 100% of what got damaged. So that's what we need to talk to them about. Now, if they say that they're gonna charge you, $1 million for this coverage and you got a $2 million deductible, then you probably have to take a different approach to it. So once we hear some of the numbers, they didn't share those with us yet, but we will see them when we meet. Before the next board meeting, we can probably tell you that before you take any action on this.
Because I don't have any idea what the replacement value is for our system, one. Number two, is
Right.
depreciation part of that factor?
Right, I was just gonna ask.
It won't be, because we will be looking at ensuring the replacement value of it.
As opposed to a
Correct.
depreciated value?
Right.
Okay.
Because we'd have to put new up to replace it, so we would use the replacement cost on it.
So there has to be a calculation every year to say what that replacement value would be, obviously, and then adjust the premium accordingly.
Depending upon how much coverage we get in the first place. If it's only gonna cover a third of it, then, yeah.
So at this point, we have been self-insured for those.
Yeah, that's correct.
And
And
just
we've
been
had,
go-
we've had minor incidents where they have covered it.
Mm-hmm.
Oh,
So it may not be on paper, but we've had minor incidents that they have covered. But if you have a significant issue, as Kevin's talking about, an ice storm, a tornado, if they didn't, we would be totally
Because
out.
we had the wind shear on County Road.
And they covered it.
And so
Right.
I thought they covered it.
Yeah.
I think,
Right.
well, if we don't have coverage, how'd they cover that?
Yeah, that was Lori's question.
We were lucky.
I
They
guess
did a
we
good
were.
job and they found a way to cover it.
Yeah,
Okay.
working with our local insurance companies here. I think that's one of the benefits for us. But yeah, they made it clear to us if we had a significant event, that there was not coverage for any of those systems.
That UFS electric rate study, that had so much information in it that showed what we need to do and what we need to start thinking about now to be ready for the equipment repairs alone. Which ones we need to start with, which substations, and
Right.
So this is, all kind of falls into play, it's all
Mhm.
tied together, so I'm in favor of moving forward
Yeah,
with
the
this.
rates that you adopted, of course, increased the amount of capital improvement money that is available.
Right.
So that was a good step in the right direction as well. Other questions? Okay, thank you.
Thanks, Kevin. Next is a resolution for a then and now purchase certifying adequate funds were available for the solar field equipment replacement. Lori, could you please number and read, please?
Yes, sir. Resolution number 21, 2017, a resolution for a then and now purchase certifying adequate funds were available.
Would you like me to address that?
Sure. Please do.
The board may recall that we had an equipment failure at the solar field a number of months ago. We believe that equipment failure, the cost of repairing and replacing that equipment should have been borne by the contractor. They disagreed. They submitted a bill to us, so we didn't have a purchase order issued. And we discussed that with our insurer. The insurer told us to go ahead and present the claim to them, that they would pay it, and then they plan to subrogate that claim and try to recover that cost. So if the insurer had not offered to do that, then we would probably still be in a disagreement with those folks. That is the reason for this then and now, and the next one. They're both related to the same incident.
Any questions? Because at the time, this is prior to Kevin being with us, we had meetings, we had no idea that we were even going to get a bill. So therefore, we never pursued a purchase order. We didn't think we were going to need it bad. But events changed.
And this is a part of the Ohio Revised Code that says if you don't have a purchase order in place prior to receiving your invoice, the requirement is to have the then and now, which, of course, then says you had the failure or the problem and it cost this much, and then the now, you have the funds available at the time you make the purchase order. Kind of complicated if you don't sit down and do it.
It should also be mentioned probably that we have received reimbursement from our insurance company for all but the $10,000 deductible on this. So now it's down to the insurance company in Rudolph Libby.
That's good.
So we paid the bill.
We paid it,
Yes.
but we've been reimbursed for everything except our deductible of $10,000. And for this then and now. On the next one, the check is in the mail.
Yep.
I'll make a motion, we approve it.
Second.
Jim?
Yes.
Phil?
Yes.
Dick?
Yes.
Karen?
Yes.
Tom?
Yes.
Next on the agenda is a resolution for a then and now purchase certifying adequate funds were available for the solar field equipment replacement number 2. Lori, could you please read number?
Resolution number 22, 2017, a resolution for a then and now purchase certifying adequate funds were available.
And again, this is the same. It was just for an added amount of money.
Second, the final bill.
In
The final bill.
approve resolution 22 for then and now and the final billing.
Second.
Karen?
Yes.
Dick?
Yes.
Bill?
Yes.
Tom?
Yes.
Jim?
Yes.
Next on the agenda is a motion to execute letters of support for Bryan Community Hospital and Wellness Center's efforts to renew funding, federal funding for 2 medical assistant programs. Kevin, if you would, or Mayor, would like to address it?
Yeah, the hospital, like every other agency, including the city, are cut from time to time from funding either at the federal level or the state level. If it's at the state level, we hear from AMP Ohio, Jolene, to write letters to Hyde or McCullough to try to get this corrected. Phil sent a letter out that their programs that was supported at federal level are being cut dramatically, which could really hurt the locals. And he asked that elected officials sign a letter of support to not cut these, and he's going to hand deliver them to Latta, Brown, and Portman, I think next week or the week after, and try to change that. Whether it helps or not, I don't know. Council at the last meeting signed letters that I took up to Phil, and I sent it on to Kevin. I don't know if you folks want to sign and take them up there. It's entirely up to you. But that happens from time to time, and if it has an effort to save our local hospital and help them out, so be it. Entirely up to you whether you want to do it or not.
You entirely got my support, because if they lose that much money, that's a couple $2 million. And you know what would happen? They would probably have to cut staff. And we need that money, that income money that supports the community. So I'm 100% for it.
Ditto. Yes. It seems to me, just talking to people and listening to people in the know, that it's awful hard to get good help, and in our community, in our hospitals, and if this doesn't work out for us, it's going to be even harder. So I'm fully in support of signing this letter, and whatever, if it helps, great.
I'd hate to be in Mr. Annan's position and have to run a business the size of that and be dealing with the potential shortfalls that he's looking at. It could be catastrophic for them.
Yes. So they have our support.
Yeah, my support.
I move that we execute a letter of support and sign it as board members.
A second?
Bill?
Yes.
Dick?
Yes.
Karen?
Yes.
Tom?
Yes.
Jim?
Yes.
Next on the agenda is a request to put Lisa Momman on regular employment status. Mark?
Lisa Momman has been an account clerk 2 in my office for the past year, and I'm requesting that the board remove her from probationary status and place her on regular employment status. She's done a fabulous job, has excellent customer service skills, and is doing a great job in income tax.
Great, so moved.
Second.
Bill?
Yes.
Karen?
Yes.
Dick?
Yes.
Tom?
Yes.
Jim?
Yes.
Thank you.
Congratulations, Lisa.
Next on the agenda is to pay the bills.
I'll make a motion, we effect semi-monthly disbursements.
Second?
Jim?
Yes.
Dick?
Yes.
Karen?
Yes.
Bill?
Yes.
Tom?
Yes.
Next, comments from BPA and staff. Jim Simons, likely made. Mr. Schraub?
Yeah, I'll go first. Article in the paper since our last meeting that our rodeo team went to AMP, placed, I think, 3rd overall, so congratulations. JJ and Brad. Can't think of Brandon, so. Also, I'm looking at the solar generation and the hydro generation for the last month, and it looks like the sun was shining and the water wasn't flowing.
That's pretty much it.
The good thing is we got we talked about the solar field and we got it up and running. In the last 3 months, we've had real good generation out there. On the flip side, last month I commented about we're having a banner year even if nothing else happened. Well, in August, almost nothing else happens. But we got 4 more months to go. I think we're still gonna have hopefully we'll have a good year.
You know, we've already exceeded the total for the previous 2 years.
Right.
And we started adding this graph to your packet that shows the generation. These spikes that you see was when we were running it to help reduce the peak demands of the community. So when we don't have adequate water and we know we're coming up on some hot weather, then Matt saves that water and then runs it during that 2 to 4 or 2 to 6 p.m. peak period, and was able to shave about 2.5 megawatts off our peak demands those days. So even when it wasn't generating as much energy throughout the month, it was still saving our customers money.
A strategic use of water.
That's what I.
Mr. Sauer.
Did they know how that worked? Put that in
Bill,
place.
would you?
Yeah, mine would be Max, a little political soapbox, but relative to small towns in America, and there seems to be an attack on small towns in America relative to the federal government and what they want to regionalize things and do things with healthcare and other things within the small towns in America. And so we just see some of this consolidation trying to drive everybody to the metropolitan areas for everything. And those of us who live in the quality of life in a small town appreciate that and want to have those benefits of a local hospital and local doctors. And so we're using a lot of fossil fuel to drive the metropolitan regional medical centers to get attention or whatever it happens to be when we can be provided locally at a much less cost. So I think it's more cost effective, and we've all seen how things have worked in the larger cities with projects and mismanaged and things all go in trying to get care. So I appreciate local doctors, I appreciate local service and all those things, and why we are a local utility or public-owned utility is because of service in those things, because we were abused by private-owned investor utilities. And so it speaks to us in our DNA about how all this works in the local community. And I think it's really important for us to stand up and say to Senator Portman and Sherrod Brown and Bob Letta, it's really important to us. And our votes and our monies go off to Washington, and some of the decisions we don't appreciate. So I know this is part of the Affordable Care Act, and people are very sensitive about when you say Affordable Care Act or another word for it, and I won't use that. But the idea is that some elements of that have been very beneficial to everybody getting coverage. And I think with the humanitarian ideas that we want to take care of our local people and our local own, and this helps us because it has to do with the value of Medicaid payments and those things that happen to our hospital, and for our hospital to exist. So I think it's important for us. So Max, you can take any of that you want, but I think it's important for us to do all we can as citizens of a small town to fight for small towns and small town rights.
Amen.
And, okay,
Done?
I'm done.
Karen?
Yeah, I'm good, thanks.
And again, I'd like to congratulate the electric crew at the rodeo on their 3rd place finish. They just keep doing a little better every year, so I'm glad to support them. And other than that, nothing. Mr. Mayor?
I have nothing else for your consideration this evening.
Mr. Mayor?
Well said, Bill. Our council meets tonight at 7 o'clock, since a holiday yesterday. They're going to act on a grant from the Homeland Security for additional staffing at the fire department. They also will act on the final plat at Greenfield addition, Wellington addition there. There's a CRA for the Bard expansion, maybe you read that, they're going to expand 15,000 square feet, so forth. We're happy with that, and some new employees and so forth. And there's several employee changes and some new hires coming on tonight, so I'll be at 7 o'clock. Welcome to attend.
You're gonna make it.
Yeah, I'll make it.
We'll be there. More?
No, sir.
Max, you never have anything to say.
Just
write it down.
He says it with his pen.
Just be kind to us.
Always.
Well, with that, I'll entertain a motion to adjourn.
I'll make a motion to adjourn.
Second?
Jim?
Yep.
Tom?
Yes.
Dick?
Yes.
Karen? Yes. Bill?
Yes.
We adjourn.